It is time to reveal my number 6 favorite dividend stock of all time. This one is really going to surprise you guys out there. I actually even surprised myself with this one. If you've been following my channel for a while, you know I invest for dividends, for cash flow, because I want to use my cash flow to pay bills. And one day I want to completely live off of the income that comes in from my portfolio of 38 dividend stocks. You also know I've been going through my top 10 stocks. I made it through my top 5. Top 3 were really easy. As I started getting into 4 and 5, got a little bit more difficult to select those positions. And now I'm into number 6. The reason I'm going through my top 10 stocks of all time, I'm taking this time, putting in the effort to go through my entire portfolio and really identify those top 10 is because next year in 2019, I am only going to be buying my top 10. That is going to be my goal. I'm going to be really focused, laser focused on building up my top 10. And so I'm doing these videos to share my journey with the community out there. And I'm also doing them selfishly so that I can prepare for 2019. I can know exactly where to go when I have money to deploy each and every month. Now, as I prepare this portfolio, I figure out my top 10 stocks of all time. I'm looking for a lot of diversification. As you know, my number 1 is Johnson & Johnson, and so that one is in the healthcare space. My number 2 is Pepsi. That's in the beverage and snack food space. Number 3, McDonald's in the restaurant space. Number 4, United Technologies, an industrial company. Number 5 being Clorox, a consumer packaged goods, cleaning products company. All of these are different types of companies. They're different styles of companies. They're my favorite company from each of these respective industries. By the way, no worry, don't worry about taking notes. I will link in the description below to all of the videos that I have done on those top 5. So I was thinking, Ian, which one is going to be your number 6? Which industry are you going to target? And I was actually down to two types of stocks. It was either going to be a real estate investment trust or a utility. I decided to go forward with the regulated electric utility space. If you've been following my channel for a while, you know I love that space. And there's actually 3 companies that I own in this space. One of them I've never disclosed before. So the 3 companies that I own are Southern Company, Hawaiian Electric, and also Duke Energy. And so I'm going to compare and contrast all 3 of these today, and one of these is going to become my number 6 favorite dividend stock of all time. So let's get started. So long intro today. Wanted to really build the momentum here because I am just so excited about this series. And by the end of 2018, I'm going to get through all of my top 10. So I got to keep up the momentum here. Got to keep going. But I think just picking a utility for my number 6, I think this is going to surprise a lot of people. But I'll tell you, I might be a little bit different than the average dividend investor. I not only want dividend growth, but I really do appreciate current cash flow. I don't use my dividends right now to pay bills, but I really value current cash flow as well. And what I like about utilities is they tend to provide current cash flow because most of them, or the ones I hold at least, have really substantial starting yields. And so money I put to work today can start bringing me cash flow tomorrow that is substantial enough that it could be used to pay bills. So I really like that about utilities. I like the fact that regulated electric utilities are regulated by the government, so it's very hard, if not impossible, for a competitor to come in and displace their business. They have a competitive moat, and they work very closely with these local governments, and I don't see these companies going anywhere, so I like that about them. They are predictable companies. They are boring, if you will. I like boring companies. There's just a lot to like about regulated electric utilities, and quite frankly, I only own 3 of them out of my 38 stocks, and I could probably stand to up my allocation in these stocks. And so being that I'm going to pick one of these 3 for my number 6, I was actually looking how much money I have in each of them. Only one of them right now would have enough money to basically carry the weight of being a number 6 position in my portfolio. But the other two, that's Hawaiian Electric, by the way. The other two, they're kind of, I've got good money in them, but not enough. I've got a ways to go. And so again, the reason I'm framing here my top 10 stocks is the money that I have in my stocks, it doesn't always correspond with their status in my portfolio, their ranking. And I need to figure that out. I need to really challenge myself in 2019 to go all in and to focus on bringing my top stocks to size. So anyways, I want to go through these. Interesting thing about utilities. Based on the annual reports of two of these, Southern Company and also Hawaiian Electric, over the long periods of time, these stocks have beaten the S&P 500. And so I think off the bat, this is really important. Now, they have exceeded the S&P 500 when you count dividends reinvested. And so oftentimes if one pulls stock charts online, compares, hey, how did Hawaiian Electric do versus the S&P? It may not look that good because those charts don't always reflect reinvested dividends. But with reinvesting dividends, if you look at the annual reports for these companies, I don't know about Duke because I didn't see that in their annual report, but for Southern and Hawaiian, they both beat the S&P 500 over long periods of time. So just some initial statistics here. Dividends. You know I invest for dividends. I got to start with the dividend. Although the dividend, the current yield, it shouldn't really reflect me picking a number 6 stock. I'm going to pick this position based on quality. I'm not going to pick it based on current yield because current yield is an indication of current market opportunity. But again, when I'm building my top 10 list, it has nothing to do with current market opportunity. It has everything to do with quality and which stocks I like the most, which stocks I love the most. So anyways, how do I calculate the yield? Southern's is 60 cents a quarter, multiply it by 4, divide by the current share price of 45.27. I get a 5.3% current yield. Awesome. If I buy shares today in Southern Company right off the bat, I'm getting 5.3% return in terms of a dividend yield. Hawaiian, 31 cents a quarter, 4 quarters in the year, divide by the current share price of 37.57, 3.3% starting yield. I mentioned this a long time ago, long time ago. If you're a loyal PPC Ian subscriber, by the way, thank you. I love you guys. I have such an amazing community here. We have such an amazing community. And I know back in the day, people were asking me, hey, Ian, you brought up this concept of the trading range stock. I even mentioned this. I have certain stocks in my portfolio, not a lot of them, but they tend to just trade in ranges. They don't really, capital appreciation, it's kind of there, but more or less they're in ranges. This is one of them. In Hawaiian Electric right now, 37.57, it's at the top of the range, in my humble opinion. And whenever I buy Hawaiian Electric, I try to buy it in the low 20s or even the teens if it ever gets there. But that's where I like to buy. 37.57, I'm not buying there. I only buy if I can get a starting yield on this thing over 5% or around, at 5%. But at 3.3, no, I'm not going to be buying more, but I'm going to reinvest my dividends. I'm going to enjoy the cash flow that's coming in because I love this company. They've been around forever. I think they've been around since the 1800s. And they, what I love about this company, quite frankly, is not only do they have a monopoly, but they have a monopoly on the Hawaiian Islands. And I just don't see a competitor coming in there and messing with these guys. In fact, there was a company, NextEra Energy, tried to come in, take these guys over, and there was a thug life moment. I was so excited to see Hawaiian Electric step it up, get support from the local government, and just push this NextEra Energy out of the picture. So sorry, NextEra, you are not getting Hawaiian Electric. You're not messing with this brilliant Hawaiian company. Anyways, Duke, they pay 92.8 cents per quarter, 4 quarters in the year. Multiply that by 4, divide by the current share price, 84.05, 4.4. So the current yield, starting yield is a 4.4. Very respectable for a starting yield. Not great, not exciting, but hey, top 10, I'm not ranking on starting yield, but this is just a reference point. What is the starting yield? Here's where it gets more exciting, dividend growth. We all think, hey, utilities, there's not a lot of growth there. They're only going to grow with the population. Well, guess what? Some of these utilities are in really great places where the populations are growing. And so I try to invest in regulated electric utilities that are in very desirable places. Places like Hawaii, for example, or in the case of Duke, they're in the Carolinas. I'll tell you an interesting story about Duke while we're on the topic of Duke. This was one of the original stocks that I bought way back in the day. Actually, I remember like way back, some of the first stocks that I started investing in were basically J&J, my #1 stock of all time, Pepsi, #2 stock of all time, and Duke. But the thing is when I bought Duke, it was not Duke. I bought a company called Progress Energy. I think the ticker was PGN. Progress Energy was the, if I recall correctly, the Carolinas-centric entity of Duke's portfolio, and I bought into that territory, one, because I liked the company, but I liked the growth prospects of the Carolinas. And anyways, they got acquired by Duke, and I still hold Duke to this day. Now, what's interesting about these, let's look at the dividend growth. So anyways, getting back, dividend growth. A lot of people think, hey, there's not a lot of growth with utilities, and if you look at like something like Hawaiian Electric, you are right. The dividend growth, 5 years, is 0. Hawaiian Electric's dividend hasn't gone up as long as I can remember, but again, it's a trading range stock. I like to buy it when the stock is down and the current yield is good, and I just buy and hold forever. I look at it as a proxy for a bond and just an investment in the Hawaiian Islands. I love the Hawaiian Islands. I'll link in the description below to a video I just did from the Hawaiian Islands, from Maui. So anyways, though, with Southern, 5 years dividend is up 18%. Duke, 5 years dividend is up 19%. Boy, I like that. I like that growth trajectory of seeing 19% growth with Duke, 18% with Southern. That is serious dividend growth. These companies aren't stagnant. These companies aren't just sitting by. They are growing the dividend. They're rewarding shareholders, and I love that. So moving on, market cap. Southern is $45.9 billion, Hawaiian $4 billion, Duke $59.85 billion. My top 5 stocks of all time: J&J, huge company; Pepsi, huge company; McDonald's, huge company; United Technologies, huge company; Clorox, smaller company. But you get the drift here. Huge companies, small company. I don't have any mid caps, and I'd like to have more smaller companies in the top 10. And so for that reason, quite frankly, all of these work, because you got a mid company with Southern, mid-size with Duke, real small with Hawaiian. Market caps, I like those market caps in terms of diversifying by market cap in my top 10. I like to diversify by market cap. I like companies of all different sizes having representation in the top 10. Moving on to debt. Debt with all these companies is substantial, and this is characteristic of the utility space. The utility industry, it is very infrastructure heavy. Building these power plants, it is enormously expensive, and maintaining them is very expensive. Cost overruns are the norm. Thankfully, because these utilities are regulated, they can oftentimes pass cost overruns through to customers through hikes in terms of energy costs. Now, the debt at Southern is $49 billion. The debt at Hawaiian is $2.11, and the debt at Duke is $56. Hawaiian is the clear winner here. Their debt is really low, and why it's also really low, in my opinion, is Hawaiian is a little different. They own the electric utility, but they also own American Savings Bank, which I believe is the 3rd largest bank in Hawaii. And American Savings Bank, there's going to be a lot of debt because it's a bank, and it can sometimes throw off numbers. And so the fact, though, that the debt is only $2 billion, and that includes American Savings Bank, highlights how well Hawaiian is managing their debt. So I really like that about Hawaiian. I would say with Southern and Duke, huge amounts of debt, but more or less characteristic with what I would expect in the regulated utility space. PE ratios. This has nothing really to do with which one I love the most, but it gives a benchmark. Where are these companies now? How are they trading right now? Trailing 12 months, Southern is at a 19.61, Hawaiian 22.96, Duke 21.26. These companies, quite frankly, are all trading more or less at a premium right now. Paying PEs in the 20s for a utility, it's kind of expensive, especially in an environment where the interest rates are going up, where investors who invest in utilities, oftentimes they may consider other alternatives like bonds. And so with interest rates going up, these stocks, I believe there might be some downside. And obviously Hawaiian, most expensive of the bunch. Now, the Earnings, though, for Southern are a little bit thrown off. We'll talk about this later, but they've had some projects recently that have had overruns. And in fact, I got some comments here on the channel about it, so I'm looking forward to addressing these comments. These overruns have impacted their earnings, and they probably will continue to for a little bit. But in terms of analyst expectations for the future 12 months, I looked at that as well. I looked at 2019, and we've got a forward PE on Southern coming in at a 15.09, a 20.09 for Hawaiian Electric, and a 17.73 for Duke. And so you can see these companies are still expensive, but Southern drops. Southern definitely, if they can meet analyst expectations in the future, and that's a big if, but if they can do that, theoretically here, this is the one of the bunch that's trading at the best discount at this price. And again, this should have nothing to do with my top 10, but I'm actually painting this picture for a reason, because going into this video, I actually had already selected the winner. By the time I finished this video, I started questioning myself. I did all this work, all this analysis. I started questioning myself, and I'm including, though, these current metrics because the reason I was biased was because of these metrics. But again, when I'm picking my top 10, it's not just, it actually shouldn't be based at all on current trading metrics. It should be based fully on which one I love the most and which one is the best quality. Anyways, moving on, 5-year revenue growth. The revenue growth for Southern has been 39%. Wow, 39% revenue growth in 5 years' time. Just fabulous. Hawaiian Electric was actually down 24%. I want to dig into that more. I had actually trouble even picking revenue from their earnings report. It was not highlighted very prominently, maybe because it's down, but their operating income was up 19%. So I think there's something going on with Hawaiian Electric where revenue is not always the end-all be-all. The operating income was up, and so that there's something going on there, and it may have something to do with their banking operations. I just don't know, so I need to learn more about that. But again, something, just a note in my notebook, something to take a future look at when I've got some free time. Duke. The revenue is up 20% in the last 5 years. So solid revenue growth there with Duke as well, but Southern really the winner. Now, I put over here also net margins. Net margins at Southern are really low. They're 3.7%. This is for 2017. The reason the net margin is so low is Southern's been having some cost overruns and some issues. There's two things that have come up. There's this project called Vogtol, and there's another one called Kemper. So Kemper was a coal power plant. They actually had to curtail that whole project and shut it down. They paused it. And I didn't read into it too much, but they took a big charge for this in 2017. It lowered their earnings, hence the low margins, 3.7%. This Vogtol thing got a lot of, I've done videos here about Southern before. I'll link in the description below. And I've gotten a lot of questions. Hey, Ian, this is an issue. What do you think about it? Basically what happened is they have this power plant, this Vogtol power plant. It's a nuclear power plant. They're putting in 2 new nuclear reactors from the best I can understand. And in doing that process, it is more expensive. There are cost overruns. And so it's not just Southern. There are other companies involved, but Southern is paying, they're a big constituent. They're paying a big piece of the pie to get this project done. And what happened is when the overruns came, I think there's like $2 billion in overruns or something, there was basically a disagreement amongst the various constituents. And Southern's constituent in the pie is their Georgia Power subsidiary. And basically, Georgia Power, I think they're shouldering 40-some-odd% of the cost. But the other people shouldering all the other parts of the cost said, hey, Georgia Power, you're paying 100% of these overruns. We're not going to pay for your overruns. And so what happened is it became political. There was going to be a vote on it. The government got involved. There's jobs at stake, all this stuff. They sorted it out. And basically what ended up happening is they're going to share the cost. Now, on the overruns, Georgia Power is going to pay more than like the 40-some-odd% they paid for the first part of the project. For the overruns, their cost basis jumps up, I think, about 10 or so percentage points, but there is sharing that's happening. And so I think the resolution of all that stuff is good. I think there's still uncertainty, like, hey, when will this project get done? How much will it cost? How much is Southern on the line for? Because of that, Southern is trading at a higher dividend yield and a lower forward PE than these other guys because there's just uncertainty with this project. But at the end of the day, I imagine these projects, they're very important to be able to scale the company as more people come into their network, more customers they need to provide this power to. And so these projects are necessary, but this is why debt is so darn high at these companies. And I imagine, look, I'm in a business, I work in real estate where budgeting is really important, and you really want to do a good job budgeting so you don't have overruns. And I imagine with people at Southern Company, they're experts at budgeting, and so if there are overruns, that kind of took people by surprise here. It took everyone by surprise, and so hopefully the current budget that they have is spot on. Hopefully there's buffer in there. But again, there's some uncertainty with these guys. Kemper threw them off last year in 2017. Vogtel's throwing them off now. Hopefully all of this stuff gets resolved, but I certainly think things are better now than they were a few months ago because all the people involved in the project are going to cost share in these overruns, so that's a good thing. Now, anyways, hence the low net margin. But I ran a net margin for prior years on Southern, and it came in around 12%, so that was nice to see. Hawaiian, 6.5% net margins, plus or minus. Again, their annual report was kind of wacky, and so I'm not sure if my net margins there are perfect, but that's where I'm coming in. Duke, 13%. And what I like about Duke is I think it was pretty steady. I was looking at a few years of net margins. Their net margins were steady, 13%. No Vogtels or issues like that right now with Duke, but they could always come up in the future. You never know. Investments in infrastructure are so important. And boy, just think, a lot more people these days are buying electric cars. I just did some videos on oil here, and people wonder, hey, what happens when people buy electric cars? So when people buy electric cars, they need more energy from these types of guys. And these guys need to scale their infrastructure to be able to deploy all of that power to these households who are charging up these vehicle batteries. And so, interesting dynamic there. So I compare the three, and I'll tell you guys, going into this, I was Southern all the way. Southern, it's Southern. No way is it anything else. My number 6 stock is Southern. And I think I was getting real tempted by the current dividend yield, by the forward PE, quite frankly, by their revenue growth of 39%. But at the end of the day, what really changed, and obviously my choice is not Hawaiian Electric. Bless these guys, I love these guys, but to be a top 10 stock of mine, it's not going to be a trading range stock. It's going to be a dividend growth stock. And it's going to be one that has performed quite well in terms of growing the dividend over time, yield on cost, all that good stuff. But again, I love Hawaiian, and what's funny is they're my biggest holding of the three, but I did that because a few years ago, they tanked, locked in some great starting yield, some beautiful starting yield, and I'll do a full-fledged video on these guys in the future so I can share all of that in a future story. But I picked Duke, and why did I pick Duke here? At the end of the day, there were a few things that happened. I am a firm believer that my gut, my early instincts when I got started all these years ago were oftentimes the right instincts. Why is that? J&J and Pepsi, 2 favorite stocks of all time, 2 of the early first holdings I ever bought. I had to remind myself today, even after I wrote all this down, I still thought Southern was number 1, but literally before this video I was just setting up camera equipment, I'm like, nope, no it's not. And the reason is Progress Energy is one of the first stocks I ever bought. In those early days, I literally spent so much time analyzing. I actually bought all these research reports on Progress Energy, spent days and days and days comparing it to every utility out there, and I'm like, yeah, Progress Energy, this is my stock. This is for me. I mean, back in the day, they were paying a huge yield, by the way. I remember Progress when I first started buying. I think the yield was in like the 6-7% range. But anyways, quality. Why else did I pick Duke? Net margins are the highest of the bunch, most consistent of the bunch. Why else did I pick Duke? Quite frankly, they don't have Vogtol and Kemper. They're not having these one-time charges. They're not having these overruns. Surely this could happen in the future. It could happen in the future with any of these guys, so I don't penalize Southern that much. Revenue growth was really good at 20% over 5 years, not as good as 39% at Southern, but I'll take it for utility. And starting yield shouldn't influence me, but it's still reasonably good. I want my top 10 stocks to have quality. I want them to be, I don't want to get dissuaded by current valuations, by opportunities. And don't get me wrong, I love Southern. I've spoken about it at length here. I love all three of these. I don't have enough representation in my portfolio from utilities. I want to add to all of them. That said, I'll tell you, this is a hard decision because in my top 10, I'm only going to have one utility. I know it. I'm not going to have two utilities in my top 10. And the one utility that I'm going to have in my top 10 is Duke. And like I said, next year, 2019, I'm not buying anything out of my top 10. Sorry. Rest of them, I can reinvest dividends, but they're just going to sit there and grow on their own. But I am all about that top 10 because that's where I got to be spending my time on the core of my portfolio. And so this is an interesting decision because I'm basically saying, hey, Ian, you're not buying any more Southern for a while, and it's on sale now. And so that was kind of tricky to say that, but at the end of the day, taking a step back, when I look at all of these things, I'm very pleased with the decision to go with Duke. And so I'd be curious out there, do you invest in utilities? What do you think about utilities? Which ones are your favorite? Which ones are your least favorite? Do you look at them like I do? Do you look at them differently? Obviously, I could go on and on. This video can only be so long, but there is a lot more analysis that could be done on all three of these. I look forward to doing that in future videos. There is an unending, never-ending amount of topics to discuss here, and so this is a real quick overview. Obviously, there's a lot of other metrics that I look into when I invest in stocks, but then again, this is a good high-level overview. So Duke is the winner. I'd be curious though, what do you think? Which ones are your favorite? Would have you picked Duke? Would you pick Southern, Hawaiian? Which one of these three, what are your favorite? And are there others out there that you like better than these? Okay, so fun fact, by the way, the whiteboard is back, and I'll tell you, fun story today. I own stock in 3M, ticker MMM. This is Post-it, a 3M brand. I love these guys. What's fun is I was at the store today and I was going to buy I was actually going to go there with the intention of buying the store brand because it's a little cheaper, maybe $3, $4 cheaper. But the store brand, what I found is the whole thing was more flimsy than last time. Like the cardboard on the back, it was real thin. It wouldn't even stand up like this. It would just kind of fall down. It had to actually be on one of those things that you hang it on. So the quality has gone down over time. Whereas with 3M, quality is much better. And as I was writing on the paper itself, the pen just, it looks neater. It looks nicer. So this is a good story. I feel so happy that my investment in 3M, even with something as simple as this, a big Post-it whiteboard, the quality is there. And so I love these guys providing these premium quality products that everyone benefits from. Love 3M. Love these guys. By the way, 3M is not a top 10 stock of mine just because I first started buying it in 2018, haven't owned it long enough. So one of their criteria for being a top 10 stock is I have to have had it for a long time. I have to have a relationship with the company. It has to have a real relationship with me that I've experienced over a long amount of time to make it in my top 10. So share some of your top stocks below. Top 10, top 5, would love to hear it. Hey everyone. If you enjoyed the video today, I please invite you to give me a thumbs up, a like, subscription, a comment. All of that means the world to me. I love you guys. I thank you for your support. Blessed here with this amazing community on PPC. And also, before I go today, a long list of disclosures. In terms of full disclosure, I own the stocks mentioned today. I am long. I own stock in 3M, ticker symbol MMM. Southern Company, ticker symbol SO. Hawaiian Electric, ticker symbol HE. Duke Energy, ticker symbol DUK, my number 6. And then I also, in terms of full disclosure, own stock. I'm long on Johnson & Johnson, ticker symbol J&J. PepsiCo, ticker symbol PEP. McDonald's, ticker symbol MCD. United Technologies, ticker symbol UTX, and Clorox, ticker symbol CLX. I own all of those stocks in my personal stock portfolio, and I will link in the description below to individual videos about all of those if you want to learn more about them. Before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my personal journey here on YouTube for fun and entertainment purposes. Thanks, everyone. Thank you so much for hanging in there. Thank you for the support. I will see you all in my next dividend investing video.